A lot of issues I see in traders is that they can't seem to find a solid strategy that works. In this video, I will be going over an easy continuation strategy that makes me 2% on my account every week. Make sure to follow and DM me on Instagram at Spektrades. If you have any questions, let's get into this video. Before we hop on the charts, we'll be going over our schematic and our trading plan for this continuation strategy. For this strategy to work, we have to go over our time, our objective, our risk management, and our target. So first and foremost, let's go over this schematic, right? So right here, this is like a clean schematic. The chart will never look this super clean, right? But the schematic will give us an overview of how it may look like. So first, we have to go over our reversal, right? We're not trying to catch a reversal because the reversal will always try to trick a lot of traders. Us, we will be more aligned and wait more patiently for the continuation of this strategy. So first and foremost, as you guys can see, price gave a liquidity sweep of this old high and give us a breakup structure of the low that did the liquidity sweep. And then as you guys can see, price taps inside of this zone right here, probably a higher time frame point of interest, right? As you guys can see, I marked it in red because this is our reversal point of interest right here. Not highly likely, price will not go over this reversal right here first to go over. But after price taps inside of our reverse, right, what we are looking for now, I'm going to label it now, is for a breakup structure of the low that did the first reversal. Now that we have our breakup structure, as you guys can see, now it confirms now our new range, right? Our new range. So make sure you guys watch that strong high and weak low video also. Our new high, our strong high, becomes this new high right here because now price give us a liquidity sweep of this internal range high and tap inside of a zone, a higher time frame zone, and give us a breakup structure. So now our new high is from here, our new strong high is from here, and our new weak low is from here. And then what we see that price builds liquidity, right? So our first entry for this continuation strategy will be after this second breakup structure. So this is our reversal and this is our continuation because now it has been confirmed, right? So after price now give us a breakup structure, we will wait for more liquidity to be built and then price will come back and return and tap inside of our zone. This will be our first entry. And then for our second entry, this will be the most confirmed entry right here because now, right, with every new breakup structure, price will now only look back to give us a pullback. So make sure you guys watch that how to stop fear or FOMO video also. That's a great video if you guys want more understanding too. So after every breakup structure now, boom, breakup structure, price will come back and just use that low, did this liquidity sweep, just like you see here. Price comes back and use that low to go lower, and then price come back and use that low again to go lower. So now let's go over our trading. Best times to trade this strategy is from London session from 1 a.m. to 7 a.m. right? That's the London session, right? And then for New York session, right, is from 8 a.m. to 12 p.m. right? 8 a.m. to 12 p.m. This is the time right here. The time is very critical because this is where the most volatile and the most movement will be in the market. So always aware of the time. Never trade against these times right here, right? This is from 1 a.m. to 7 a.m. Eastern EST. And then from 8 a.m. to 12 p.m. EST, right? So align your charts with the Eastern Standard Time, wherever you may be at in the country. And then for our objective, right? Our objective is like our bias also, right? So first thing we have to do is identify the higher time frame bias in the higher time frame zone. First, like I tell you, right, we have to understand the higher time frames. So first, price taps inside of this higher time frame point of interest. This is our HTF, our higher time frame point of interest. So that's number one. We always want to identify our higher time frame point of interest. The higher time frames is usually from the daily, 4 hour, and the 1 hour, right? This is our higher time frame. You can use the weekly also, but this is more for swing trading. This is a day trading plan, right? So always take from the daily, 4 hour, and the 1 hour. And then for second, right, we wait for price to clear liquidity from an old high or low, right? That's the second thing. We always wait for a liquidity sweep to happen. Just like you see here, for the reversal, right, we wait for price to clear this liquidity on this internal range liquidity. Is the same for our continuation also, right? A reminder, we're not taking the first entry. We're waiting for price to give us more breakup structures to the downside to then confirm our reversals, right? So for London session, we wait for an Asian session high or low to get swept. And for a New York session, we wait for a previous session high or low to get swept. So say that this first entry right here is our London session entry, right? So this box right here, I'm just gonna make it in the box. This gray box right here becomes our Asian session. So we wait for our Asian session to get swept inside of our zone, and then we got a breakup structure. So now this confirms our first entry because now we are playing inside of this higher time frame reversal zone. So this right here for the London session, we wait for the Asian high or the low to get swept. And then for the New York session, we wait for a previous session high or a previous session low to get swept. So now this is our New York session continuation pattern. So this is our London session, and then this is our New York session, right? So after price now clears this Asian session high and then go lower and then give us the Asian session low, now we wait for price to pull back in here, right? And then give us our second entry to continue this continuation strategy. And then for number 3 is wait till price gives a market structure shift or a breakup structure. Just like I stated, we always wait for price to give us market structure shifts or breakup structures to the downside or the upside before we start looking for a certain zone. We never just want to take the trade out confirming a liquidity sweep or a breakup structure to be in place. That right there will give us a more confirmed type of scenario for our entry. So that's number 3, right? And then if price presents a sell, we wait for price to retrace back to premium before looking for a PD array. So if we are in a sell format, we always want to grab our Fibonacci's like this. Say we just like this, we're going to use this zone right here. We wait for price now to pull back inside of a premium zone, right? As you guys can see, this is premium and then this is discount, right? If we are looking for sales, you always wait for price to pull back into premium and then you take your entry. And then if you are looking for buys, you wait for price to pull back into discount and then to take your buys right here. So this is right here, and then for a buy, if price presents a buy, wait for price to pull back to a discount before selling, just like we stated right here. So this is our objective, right? This is the times, and this is the objective. And then for risk management, right? Never risk more than 0.50 to 1% of your account per trade. If you're a super beginner trader, I would even say to lower it to 0.25% to 0.50%. But if you are a more advanced trader, you can go higher to 0.50 to 1%. This is going to keep you in this balance right here. So just in case a trade don't play out, right? Because no strategy has a 100% win rate. There's no strategy like that you're going to win every single trade. So if you manage your risk properly, you will always end up with a small loss or a win, and then you will always remain in profit. So risk management is super important. And then for our targets, we always target old highs or old lows. So as you can see in this sell format, what we're targeting old lows, just like right here, we're targeting old lows. And then we're looking for a 1-to-1 R and or a 1-to-3 R, depends on how long the trade plays out. If you're a super beginner trader, always aim for a 1-to-1 R. That's going to train your mind to take your profits and not get greedy. And then if you are a advanced trader, you can wait and hold it for a 1-to-3 R. But this right here, not all the time this works. So I always recommend a 1-to-1 R, a 1-to-2 R, to a 1-to-3 R as you grow with this strategy in this trading. So this is our schematic and this is our trading plan. Make sure you guys draw this and write this down. Now let's hop on the chart and see exactly how we can execute this in action. If you are interested in more in-depth and personal help, make sure you check out the first link in the description for the Patreon, where we have our Spektrades Mastery Hub, where you can access private mentorship lessons from beginner to advanced mastery, and also live trading with me every single morning, and also daily pre and post market analysis and exclusive community access. So if you are interested, make sure you check out the first link in the description for the Spektrades Mastery Hub. Now that we're on the charts, as you guys can see, this is our trades, right? We're going to be going over them lightly, but first we have to see our main reversals, right? So this is our reversals, right? The reversals always scare a lot of traders. That's why a lot of beginner traders and novice traders, they should be going for continuations instead, because now the price has now confirmed our reversal. First, as you guys can see on the higher time frames, price cleared this liquidity on this old high and then give us a breakup structure, or what you call a market structure shift, where price is going from one structure to now going to another structure, right? As you guys can see, price was once in a buy format, but now price looking to go in a sell format. Let's remove everything. So now, but this right here is not truly, right? It's not truly for beginner traders. You have to be an advanced trader to be trading reversals, right? Because price may just come back up and just sweep these old highs right here. So once you get your market structure shift, this sell right here is more confirmed. And now with every break of structure, price will now come back and respects those zones right here to then continue lower, right? I do have a trade right here that I took with my team on the live trading. If you guys would like to see this trade live also, right, I have that recorded and I have a lesson on that. Make sure to comment down below if you guys want to see this video right here also on this trade. But we're going over this right here for this video. And then after we get this confirmed, right, for our London session, right, we have two sessions. The London session, like I stated, and the New York session. So for the London session, we wait now for price to clear our Asian highs or our Asian lows, right? So as you guys can see, this is our Asian range indicator. I've talked about this a lot. It's just called range bought by nephew Sam. It's just the Asian range, right? Nothing specific about it. It's just to show me where the Asian range is at. So we can remove it. So as you guys can see, price came and swept the Asian highs, right? And then tap inside of our rejection block. Make sure you guys watch my last video also, the 1 week, right? The 1 week, right, where I described the rejection block and how powerful it is. So make sure you guys watch that video also. When price sweep these Asian highs right here, taps inside of our rejection block on the 15-minute time frames, right? As you guys can see, now that our trade is more confirmed, because now price will now start respecting all these bearish PD arrays. So after price swept our Asian highs, tap inside of our rejection block, where will be our take profit? Boom. You can scale down even lower, right, to get a more confirmed entry, but this is just a more day trade type of setup, right? So we can take our first take profit at these old lows right here for a 122R, right? But as you get more advanced, because you start seeing, right, after every break of structure, price will now start giving you a pullback. If you're not an advanced trader, this right here will scare you, right? So I always advise new traders to take their profits at old lows or old highs, depends on the setup. So as you can see, we take our profit right here for the first take profit at this old low right here for a 122. If you when you get more advanced, you can hold it for a little longer for a 123, and when you get super advanced, you can hold it even longer for this old low right here, right, where this range started from, this weak low, for a 126R, right? But this is for advanced traders. I really recommend new traders at all to hold their trades to these lows right here. So I always advise to take profits at these old lows or this old low for a 122 or a 123. And as you get better, you're gonna be stacking those 123s and you're gonna be getting more profitable. But if you miss this right here from the London session, like I stated, from 1 a.m. to around 7 a.m., right? This trade ended around 4, but the London session lasted around 7 a.m. If you miss this right here, the New York session will always give a continuation of the London session. So as you guys can see, price builded equal highs, right, in the beginning of New York session. We had these equal highs right here, and we had this 15-minute order block right here, right? This 15-minute order block and equal highs. So price will not come back and sweep these equal highs, because these equal highs are a good point of liquidity. Make sure you guys watch that liquidity video also, where I explain all the points of liquidity if you miss those too. So this is a good point of liquidity right here, these equal highs. So price came back up, cleared these equal highs. Our stop loss, right, you can either place it on top of this 15-minute order block, or you can place it on top of this rejection block, because now this rejection block is not a strong high. I always advise you guys to place your stop loss at the strong highs, because you will be more safe. Or you can place it here also for better RR, but I just advise you to place it at these old highs because it will be more safe. And then your stop loss right at the old high. And where are you targeting? You are targeting old lows, right? You're not holding the trade all the way lower, right? Don't get greedy. Do not get greedy, right? Always target old lows. And as you get better, you will better understand price action and then start seeing more moves happen where you can hold your trade to be like for this right here. That went for a 126R. But I always advise you guys to take your profits at old lows and just sit on your hands and let the setup play, because you just made some money now. And now you're teaching yourself discipline, right? It's not discipline to be going for the long profits, because you don't know that price may pull down here. Even though this may look like a clean sale, right? Price may just reverse from this order block right here, right? Price may just go back and reverse from here. So it's always smart to take profits at old lows and just pay yourself first. That's one of the rules in trading, to pay yourself first, right? Never hold trades always lower, right? Take your profits off the table. Let price show you what it's going to do. if price gives you another pullback right inside of this order block right here, this could be another entry that's more confirmed, because now you already took some money off the table and now you possibly can get you another entry. But always take your profits at old lows or old highs if you are in a buy format, or old lows if you are in a sell format. But this is going to be it right here for this video. I hope you guys go on your charts and test this strategy out. Just back test this strategy, go on a lot of charts, pick your favorite chart: gold, NAS 100, EUR/USD, GBP/USD. This works on all charts, right? It's super simple. It's super easy to execute. Follow the trading plan, follow the previous lessons and strategies that I have stated, right? And watch the free course down below. It's free, and I have a trading plan in that free course. All of it is inside that link. So make sure to click the link below, put your email in, and then you will receive that free course, a trading plan, and a psychology ebook also. So make sure you guys check those out. Everything you need is right here and exactly as stated. All you have to do is go in and put in the work and see this for yourself. But if you guys enjoyed this video, make sure you like, comment, subscribe down below, and let me know what you think. This is it. Spektrades out.